The metaverse is no longer just a concept from science fiction. It's a fast-growing reality where you can buy and sell virtual land, build businesses, and even make investments. But with digital land prices soaring, how can everyday investors get in on the action? The answer lies in fractional ownership of digital real estate. How does fractional ownership work in the metaverse? What are the financial benefits of investing in virtual land? And how can you too own a piece of this exciting digital frontier? In today's video, we'll break down how fractional ownership is transforming the metaverse by making digital real estate accessible to more people. From platforms like Decentraland to the Sandbox, we'll explore how you can invest in the future of virtual worlds, even without large upfront capital. Stay tuned to learn how you can start building your stake in the metaverse today. So what exactly is fractional ownership in digital real estate? It's a method where ownership of a virtual asset, like land in the metaverse, is divided into smaller shares. This allows multiple people to invest in a property without having to purchase the entire plot. It's similar to owning shares in a company. Each share represents a portion of ownership. Thanks to blockchain technology and tokenization, ownership of digital real estate is split into digital tokens. Each token represents a share of the property, making it easy to buy, sell, or trade ownership on blockchain platforms. This ensures that transactions are secure and transparent, allowing anyone to participate in the virtual real estate market. As the value of the virtual land increases, so does the value of the fractional shares. Investors can benefit from appreciation without needing the upfront capital to buy a whole plot of land, making it an accessible way to invest in the booming metaverse economy. In the metaverse, fractional ownership works by splitting a virtual property into smaller, more affordable shares. Let's say there's a prime plot of land in Decentraland that costs 100 ETH, Ethereum. For many investors, that's a steep price to pay up front. But through fractional ownership, the property can be divided into 100 shares, each representing 1% ownership, with each share sold for 1 ETH. This process is powered by blockchain technology. Each share of the digital land is represented by a token that exists on a blockchain platform. The ownership is recorded, secured, and easily transferable between investors, offering transparency and flexibility in the marketplace. Once you own a fractional share of digital real estate, you can benefit in several ways. Appreciation. As the value of the virtual property increases, so does the value of your shares. Passive income. Virtual land can generate revenue through renting, hosting events or advertising, and fractional owners receive a share of that income. Resale. Just like stocks, fractional shares can be bought, sold, or traded on blockchain platforms, providing liquidity that traditional real estate often lacks. One of the most well-known virtual worlds, Decentraland offers a fully decentralized platform where users can explore, create, and trade virtual assets, including land parcels. Investors can buy land tokens, which represent ownership of parcels in Decentraland. With virtual land prices rising, fractional ownership allows more people to participate in this growing digital economy by purchasing smaller shares. The Sandbox is another popular platform where users can buy, sell, and develop virtual land. The platform uses sand tokens, which represent in-world currency. Fractional ownership in the Sandbox allows people to invest in virtual properties, collaborate on development projects, and benefit from the appreciation in land value over time. SuperWorld merges the physical and virtual worlds, allowing users to purchase digital real estate mapped to real-world locations. For example, you could own a virtual version of famous landmarks like the Eiffel Tower or Statue of Liberty. Fractional ownership in SuperWorld allows multiple people to invest in these high-profile digital assets, spreading both the risk and the potential for returns. One of the most significant advantages of fractional ownership is that it lowers the barrier to entry for investors. With virtual land prices soaring, many individuals can't afford to purchase a whole plot of land. Fractional ownership makes it possible for more people to invest in digital real estate, even with smaller amounts of capital. Fractional ownership allows investors to diversify their portfolios. Instead of putting all their money into one virtual property, investors can spread their investments across multiple plots or platforms within the metaverse, reducing risk and maximizing potential returns. Virtual land in the metaverse can be monetized in various ways, through rentals, advertising, or hosting virtual events. As a fractional owner, you'll receive a share of the profits based on your ownership percentage, creating a potential stream of passive income. Just like traditional real estate, virtual real estate can appreciate in value over time. As more people join the metaverse and demand for virtual land grows, prime digital properties can increase in value, offering investors a chance to see their investment grow. The metaverse is still in its early stages, and the value of digital real estate can be volatile. Prices fluctuate based on trends, platform popularity, and the overall growth of virtual worlds. Investors need to be aware that their investment in virtual land could rise or fall quickly depending on the market. Another challenge is the evolving regulatory landscape surrounding digital assets. Governments are still working to establish clear guidelines for blockchain-based investments, including tokenized ownership of virtual real estate. Changes in regulations could impact how these investments are bought, sold, or taxed, adding a layer of uncertainty for investors. While fractional ownership offers accessibility, it doesn't guarantee liquidity. Selling fractional shares of virtual land might not always be as easy or quick as selling stocks or other traditional assets. Investors should be prepared for potential difficulties in finding buyers for their shares, especially in a fluctuating market. If you're excited about the possibilities of fractional ownership in the metaverse and want to learn more about how to invest in virtual real estate, don't forget to hit that like button. It really helps us bring more content like this to you. Also, make sure to subscribe to the channel and click the notification bell so you don't miss any updates on the latest trends in digital investments, blockchain, and the metaverse. And if you've got thoughts or questions about investing in the metaverse, leave a comment below. We'd love to hear your opinions on the future of virtual real estate. Thanks for watching, and I'll see you in the next video.